Hey everyone, I'm Kasmar and welcome to my channel. Today we are diving into the wild world of Bitcoin price predictions. Have you seen some of the headlines promising Bitcoin will reach the moon or maybe millions by next year? It can be tempting to believe the hype, but is it the reality? In this video, we'll separate the hype from the facts and explore what a more realistic Bitcoin price prediction might look like for 2024. We also will look into the factors driving the hype, from celebrity endorsements to limited supply and institutional adoption as well. We also will bring in some more data to see what a more grounded price prediction might be. So buckle up Bitcoin fam and skeptics, because we are about to explore the truth behind the price predictions. Let's understand by why Bitcoin's price predictions can get so crazy. Here are a few of the main hype factors. The first one, of course, it is the BTC halving event the next month, where the block rewards of BTC will be cut into half from 6.25 BTC per block to only 3.125 Bitcoins per block. And as you know, there will only be 21 million Bitcoins ever to be created, which increases its scarcity and drives up the value of Bitcoin. The second reason is the institutional adoption of Bitcoin, where companies like BlackRock, Vanguard, and Fidelity got the approval for their spot Bitcoin ETFs, as well as these ETFs are considered to be the fastest growing ETFs ever. According to the data, the inflows in these ETFs are nearing about $200 billion just in the first few months. Let's hear Mr. Larry Fink, the CEO of the world's largest asset management company, of his views on Bitcoin ETFs.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's
Really?
gone up. I mean, look at it. It is. We're creating now a market that has more liquidity, more transparency, and I'm pleasantly surprised, and I would never have predicted it before we filed it, that we were going to see this type of retail demand.
So you thought you'd do good, but not this good.
I thought, yes. Yes,
well, IBIT is your ETF
Yes.
over at iShares.
Yes.
It's about to overtake Grayscale, which was in the business certainly a lot longer. You look at the gains since January 11th when it first came about.
Yes.
Have you ever seen this much inflow this quickly into
IBIT is the fastest growing ETF in the history of ETFs.
These factors are creating a crazy hype for Bitcoin and pushing the prices higher and higher based on the real-world adoption and utility. Let's take a more realistic approach to the prediction with fundamental and technical analysis. So the total supply of Bitcoin is 21 million BTCs, of which 19.6 million are already circulating in the market. In order for BTC to go from its current price level, which is $70,000, to $1 million, the market cap of BTC would have to go to $19.5 trillion. Coming on to the charts of Bitcoin, it currently is trying to break out from the resistance of $69,000, and as it has followed the Fibonacci levels earlier as well, then this year the Fibonacci levels suggest that its target is somewhere near $105,000 to $110,000. When and if the market touches the $105,000 level, the market cap of BTC would be rising from $1.35 or $1.5 trillion to $2.2 trillion, somewhere around that level. This market cap is still achievable as BTC has been getting so much support from all the sources like institutions and governments and retail people as well. So the confidence of investors is also shaken every once in a while because of scams and frauds in this speculative market. Recently, the former CEO of FTX, Sam Bankman-Fried, has been sentenced for 25 years in prison. MicroStrategy's stock prices have plummeted down due to some investors' concern about Bitcoin value. Also, the KuCoin exchange is charged against money laundering violations recently. But the markets will always surprise us, and there is no reason you should believe me as well. Only thing I want you to do is don't blindly follow outlandish predictions. Consider factors like regulation, adoption, and economic conditions. And do your own research and consult a financial advisor before investing.